Good morning, everyone. Welcome to our discussion today on silver and the role of silver equities in a contrarian resource portfolio. My name is apattanaik, and I'm an investment advisor at Sprott Global, based out of our office in California. Rick Rule will be joining us on the line today from Washington. I have also invited one of our colleagues, Maria Smirnova, to join us on the call today. Maria is a portfolio manager at Sprott in Toronto, and she will be heading up the new silver managed fund that we have just launched. And I thought it would be interesting to get some views from Maria on themes that are of particular interest to her in the silver space. And these are themes that investors can now access through the Sprott silver strategy. We'll discuss this in more detail towards the end of the call.
Rick, we started this discussion series in the summer of last year to address some of the common themes that we were being asked about frequently in various commodities. One of the things that I found particularly interesting in the discussions that I've had on the topic of silver with most investors is that the discussions inevitably become a discussion on the price of silver and the manipulation of those prices. Over the last 100 years, we've seen several large dislocations in the price of silver, and it has been artificially influenced by several accumulations and drawdowns of inventories. More recently, JP Morgan, following their acquisition of the Bear Stearns short position in silver following the GFC, has been in the spotlight for spoofing the market and also benefiting from the downward price manipulation of silver. We saw the recent squeeze with the Reddit crowd where people were essentially trying to stick it to JP Morgan. I would like your general view on this topic of manipulation, either motivated by greed at the level of a trading desk at a firm like JP Morgan, or fear at a more sovereign level to maintain faith in fiat.
My own belief is that very long-term manipulation is both unlikely and probably impossible. My experience working for very large financial services institutions in my youth is that the motivation that governs the action of very large financial services institutions is simply high-level employee quarterly cash bonuses. The long-term manipulation of a commodity market would involve a short position that would involve those institutions having to make quarterly interest payments on the borrow, and would in that circumstance reduce the quarterly cash bonuses payable to their employees. I believe that all markets are manipulated by trading desks and others in the very short term, but the idea that there has been, or could be, a decades-long manipulation of the silver price by shadowy actors of any point, of any type, seems difficult to me. I do remember in prior bull markets, by the way, where trading desks manipulated the price of silver higher, not lower. Certainly, Aditya, you can point to actions that are impossible to explain other than short-term manipulation. Given the fact that the futures market in silver is extraordinarily large and much larger than the physical market in silver, given that the daily trading volumes in the futures market often exceed the amount of silver available for good delivery by 100 or 200 times, the idea that players could be active in establishing positions in the futures market on a leverage basis and then take action in the physical market to increase or decrease the price of silver and take advantage of the arbitrage in the leverage available between the physical market and the futures market makes absolute sense, which explains very large physical sales at points in time when the market liquidity is the lowest. Not the action that one would take if one wanted to maximize one's return in the physical market, but precisely the action that one would take if one wanted to engage in a sophisticated spoof of the futures markets. Now, there are many credible commentators, including the founder of the firm that Maria and I work for, Eric Sprott, that take a very different point of view. But since you asked me the question, I would say that manipulation happens in all financial markets in the near term, frequently, every day. But that very long-term manipulations of the type that you are describing are, at least from my point of view, highly unlikely.
One of the things I found quite interesting and intriguing about my interactions with a lot of precious metals investors that have approached Sprott over the last 1 year is that they tend to either be gold bugs or they tend to be silver bugs. I have two questions for you here. Do you have a favorite monetary metal as an investment instrument? And how would you advise people to allocate capital between these two monetary metals in an objective way?
Your preference between gold and silver comes down to really two factors. Gold traditionally has been viewed as an insurance policy, which is to say that while gold moves for many reasons, it particularly moves as a consequence of fear associated with the ongoing purchasing power of conventional savings instruments. Silver is much more an alpha instrument. It moves after gold because it's momentum-based, but it traditionally moves further and faster. So while the gold bug is often speculatively oriented too, particularly the gold equities speculator, the silver bug is much less interested in protection and much more interested in market alpha. So in addition to preference depending on what you're trying to accomplish, it's also important to note where you are in the cycle. At the beginnings of a bull market or in the depths of a bear market, investments in gold and gold equities are generally more efficacious because gold moves first. In the middle of a bull market and later in a bull market, if we use the last two bull markets that we have enjoyed as history, silver, when it starts to move, moves further and faster. And as I say, the subset represented by quality silver assets moves the most dramatically. Certainly, the discussions that I've had, Aditya, in the last year with people that have approached Sprott seeking strategies in silver means that many of those equity investors are drawn to the age-old stories. Coeur d'Alene going from 10 cents to $65 in the decade of the 70s. Pan American Silver and Silver Standard going from below $1 to over $40 in the bull market that we enjoyed in the early part of the decade of the 2000s. These are not numbers or actions that attract people who are looking for an insurance class asset. These are people who are willing to take risk in order to enjoy substantial upside appreciation.
Do you have a preference for one or the other?
I don't. I invest for both reasons. I have a reasonably large gold holding myself and a large gold equities holding because I believe that the wind is in gold sails. I am increasing, as we speak, my position in the silver equities because I suspect that they will outperform the gold equities in the intermediate term. My preference, and in fact my suspicion, isn't something that other people should necessarily be guided by. But I do believe personally that silver and silver equities are set to outperform their gold counterparts. And for the speculative part of my portfolio, I'm moving, as we speak, to take advantage of that.
So my own makeup as an investor is a mix between a speculator and a value investor. When I look at the gold sector, it is easy for me to point to a large number of companies where I see a clear disconnect between price and value. When I do that same type of analysis in the silver space, it becomes a lot harder. And the higher quality companies tend to be fairly valued rather quickly. So what are your thoughts on value in the silver sector today? And is leverage an important measure of value in silver investments, which are different from other investment classes?
Well, later in this call, of course, we're going to have Maria Smirnova comment, I think, on those same points. Her 15 years as a silver analyst, some of which as, in effect, almost an assistant to Eric Sprott, will be an interesting way to have the value discussion. I would suggest that the leverage that you talk about is important because an important part of the discussion of silver speculation involve around optionality, which is to say a deposit that doesn't have very much by way of net present value at $20 silver could have an extravagant net present value at $30 silver. And certainly the circumstance that we saw in the last bull market where the silver price moved from, below $5 an ounce up to a sort of a peak of $50 an ounce exhibited the benefits of optionality with things like Pan American going from 50 cents to $45. So I think it's important that when you do a net present value calculation to determine whether or not a company is fairly valued, that you put in place a pricing matrix. The bottom end of the matrix, as an example, may be a 5-year median silver price. The middle part of the matrix may be the forward strip. And the last part of the matrix might be a model that's a $30 model or a $40 model, or if you're aggressive, a $50 model. Valuation or beauties associated with valuation are very much in the eye of the beholder. Given that I believe in higher gold prices and higher silver prices, and given that I believe that the valuation metrics that the market employs will change in this bull market, I can afford to be more generous, personally, with valuations.
Maria, I'd like to pose the same question to you. What segments of the silver markets attract you the most today from a value or a speculative perspective?
Well, I think Rick's answer was very well put. And like Rick said, I've been watching this space for a while, maybe not as long as he has, certainly, but a while. And I'm a big believer in exploration. And I think if we look beyond the usual suspects that are out in the market in terms of companies, I am looking for the next best thing. When it's very small market cap, sub $100 million, and you see the potential for it to grow and grow and grow. The way I structure the portfolio is, of course, the bulk of the names are producing names, names you would recognize, but then an ever-growing percentage becomes exploration names, new ideas that I seed the portfolio with, that I believe have the potential to be the future of the industry. And I know it's a big word, but that's exactly what we're after. We're after companies that can find ounces, that can define resources, that can become future mines. And that's kind of, for me, value is all in the eye of the beholder, and it's knowing or thinking, placing a bet on something that you think will blossom in the future.
Rick, I want to return to a question that I think I've asked you on many of these calls, and that is timing. And the reason I want to ask you about this is because this is, again, a very frequent question that is raised by people. Everyone's concerned that the general markets might take a toss in the near term, including the precious metals market, including silver. So do you have a view for people who are either not fully invested or want to get invested? Do you have a view on timing?
I have a few comments as opposed to a view. The first is the idea that people can accurately time the market is a fantasy. People want to do it, but they need to disabuse themselves of it. That's just the way it works. The second is that the rents that silver stocks pay in a bull market is so extraordinary that they overcome the time value of money objection, which is to say if you're 3 years early or 4 years early in a sub 1% interest rate environment, and then that class of equities goes up 500% or 600%, the fact that you were 3 years early, while it may have been hard on you psychologically, is absolutely irrelevant financially. It's very important to know that. The third, as a consequence of the first two factors, is that somebody has to right-size their portfolio. They have to right-size their investment or right-size their bet relative to both their financial and their psychological ability to withstand the uncertainty around timing and also the volatility in the silver market. I realize that many speculators put an irrational time preference premium in place, which is to say many speculators say, what do you have that's likely to triple in the next 3 months? And I'm always inclined to say maybe your debit balance, maybe the amount of money that you owe your brokerage firm, if that's the context that you intend to invest in. The truth is that timing is and will always be uncertain, and the way that you control the timing risk is to control your own temperament and your own portfolio allocation. That's the only way it works. I believe that the silver price is going higher and that the silver stocks are going higher and probably much higher. Would I put 100% of my capital around something that was a belief? No. Would I right-size my bet so that I could afford both volatility and the time value of money? Given the extraordinary upsize I personally have experienced in the silver market before, yes. Do I think that silver stocks are going to move in 2021? Yes. But have I made my own commitments to silver based on that belief? No. I think the move in the silver stocks, in other words, I believe that there is a probability rather than a possibility that silver stocks move higher. And so I think the answer to a question around silver stocks involves a when question. In other words, when will it occur? Not whether it will occur. The question that you pose with regards to a broad-based decline in equities prices is very real. I have been through at least 4 of them in my career, and they are very scary. And when they take place, they take no prisoners. Good stocks, bad stocks. General market securities, precious metal securities. What you notice, though, having gone through 4 precipitous declines in a career, is that the higher quality names in the higher quality themes bounce back much more quickly. I have become, frankly, less afraid of broad general securities market sell-offs, not because they aren't painful when they occur, but simply because they are certain to occur from time to time. Remember, though, that the stock market isn't a source of information and it isn't a product. It's a place to buy and sell fractional ownership in businesses. And if you pay attention to the value of the business that you buy relative to the price that you pay for it, and more importantly, the corporate performance, which is to say the value generation that the company will deliver over the next 3 to 5 year time frame, you will get through as many general market declines as I have been through, and you will get through them in very good order. It doesn't mean to say that they won't be uncomfortable when you suffer through them. What it does mean is they will become irrelevant to your net worth over time.
Before we end, Rick or Maria, would you like to add anything for the folks on the line?
Ladies first.
Well, I think we've covered a lot of ground, but just to reiterate, I am pretty excited about the prospects. What I find really comforting is the fact that starting last year, we're seeing a lot more capital available for these companies, where we've seen a number of deals that were oversubscribed by various investors, not just myself, but there's lots of people looking at the space, which tells me that there's already some interest, but I would say that we're still in the early innings of that. We're not at the peak. And again, the important part is that if investors start committing money to the space is very small. So as Rick pointed out, the sky's the limit. These things can go up very quickly and very high.
Rick, what I like about silver is that I think a move in silver is probable rather than possible. I also think even more than uranium, which has moved, at least the equities have moved very well in the last 3 months, that the probability is that a move in silver stocks is more proximal, which is to say it will occur and this is a speculative statement from my point of view, but that it will occur on a more timely basis than we would see elsewhere in other metals. Doesn't mean I'm right with this, by the way. I think the most important thing is for investors to have rational perceptions and rational expectations. I think that the biggest risk that people have in silver speculation isn't the market, but rather themselves. Let's say, as an example, that the move in silver stocks, rather than getting underway in 3 months, took 12 months. There is a whole class of speculators, for some reason, who believe that 12 months is an eternity, despite the fact that they expect to live for 80 or 90 years. This is irrational, and the investor needs to address it. It's the investor's problem. It's not the market's problem. The second is that the silver equities, even more than gold equities, are extremely volatile. You can have 20% declines in the silver equities index with the same ease that you and I, Aditya, inhale and exhale. I talked earlier in the call about our experience with, as an example, Pan American and Silver Standard, the fact that they were 40 baggers over the sort of 6-year time frame. What speculators need to realize when they're salivating over 40-fold gains is the fact that both of those stocks probably fell 50% or more 4 or 5 times during the period that those 44-fold gains were enjoyed. So it's important for investors and speculators to know why they're in the silver space, what part of the silver space that they intend to inhabit and why, what the duration and their expectation is, and also to understand the incredible volatility in the space. I really, truly believe, the reason I'm participating in this call is I believe that there is a probability, not a possibility, but rather a probability that both the silver price and the silver equities, as a consequence, do very well and do very well in a reasonable period of time. The fact that I believe it doesn't make it so. So investors and speculators need to right-size their bets. I also agree with Maria that the real secret sauce, if you can do it in the next 2 years, will be to take the risk with people who can find silver deposits, because high-quality silver deposits are extremely rare. And when the market buys them, they pay absolutely eye-popping prices for them. But your portfolio needs to be mixed unless you are a sort of an unremitting exploration speculator, in which case silver is really the place you want to be. If you are willing to take the risk of absolute loss in hope of 10-fold gains, 20-fold gains, 50-fold gains, there's probably no place on the planet like silver exploration. But that's only for the truly brave and truly wealthy speculator.